Welcome to VectorVest special presentation, this week delivered in two parts. Our first part titled, Learn from the Leaders. My name is Todd Shaffer, Manager of Research for VectorVest, and I'll be your presenter this evening. The all-user group member hot stock picking competition results were published in last week's VectorVest Views. With the contest still fresh in our minds, we want to review the top 3 performers, see how they did it, and glean any lessons we can from these contest winners. Our first place winner was from the Villages user group in Florida. The highlights from his trading approach were that he didn't use any market timing. He used a custom search looking for stocks whose price had popped as shorting candidates. His trading system I listed as strategery, and we'll see how that plays out as we go into the details. And he is an end-of-day trader on an end-of-day data feed. So we reached out to the contestant. His name is Edwin, and he shared the details of his plan for the contest. The key to his success is born of his strategy. It happens that he and his user group are students of our previous contests. Edwin says he loves the competitions because he learns so much from them. In fact, he never shorts in real money, so he wanted to take a shorting approach in this contest to learn more. He used some of those lessons that he learned to develop his winning strategy. These are the lessons that he mentioned. He observed that previous monthly contest winners have gained around 20%. With that threshold in mind, then he wants to lay in wait for leaders to emerge and benchmark their performance so that he knows how aggressive he needs to be. In previous contests, the Villages portfolio had fallen from 3rd place to 8th place in the final week of competition. So he decided that he needed to protect profits moving into the last week of the competition. Thirdly, he likes to use the Unisearch to scan for great candidates. So he built a custom search to find shorting candidates that made big price pops but were likely to revert back to their mean. His search would find between 1 and 4 stocks per day. And finally, when cherry picking winners, look at the past performance and patterns in the price chart. In particular, for this approach, he wants to favor stocks that have a history of the price dropping right after it makes that big pop. So as the contest begins, price has been in a downtrend, but Edwin wants to take a neutral approach and let the winners emerge. So how do you do that when the rules say you have to open 5 positions minimum? He chooses to use matched pairs of regular and contra ETFs to create a hedged portfolio. And this is what it looked like. Here's the trading history taken out of the contest portfolio. And these include all of the closed and open trades sorted by their opening date. So remember, if the trade was executed on the 1st, then Edwin had to have entered the order by 8 a.m. that day or the night before. So we see on the 1st, he entered 6 trades. Matched pairs of regular and contra ETFs. If we slide to the right, we can see their leverages and we can see their initial position sizing. By the way, notice that on a performance basis, the hedge is not perfect. It's not evenly balanced, right? So we're seeing some of the effects of contango and slippage. And in fact, the leverage, the higher leveraged trades have more of that effect. So Edwin lets these trades ride as the contest progresses, and then on Friday the 11th, Edwin sets up to make his move. He rebalances the portfolio to recapitalize the account. He enters sell orders on the 11th to be executed on the 14th. But he doesn't close the whole position. He retains just token amounts of those positions to satisfy the 5 stock minimum. But he's recapitalized the account so that he can go all in on his short position. He runs his custom search and it returns SES. Now I don't have the details of his search, but here's the stock viewer from the 11th that evening on the close sorted by percentage price change descending, and who's at the top of the list? SES. It's priced over $5, so it has some room to fall, and it has some very weak fundamentals, although it's taken a nice move on its price action. If we look at its graph, with my hard right edge of the graph set to the 11th, looking back over the past year, you can see this stock has certainly been in an extended downtrend. But more to the point, Edwin's looking for this behavior where the stock price pops and then drops, right? And it happens quite often on this stock that it makes this advance and then immediately returns back to the mean and in fact moves lower. And so here's his setup. He enters an order to go all in short at the next day's open. So now I've zoomed in. Here's the 11th. That was the tall candle we saw on the hard right edge. And on the next session's open, the price gaps up all the way to here. Now obviously there's no way to know that the price would gap up the next session, particularly if you're trading end of day data, but the price gaps from $5.25 up to $10.15. After wide-ranging price action on that day, the price still closes much higher. So let's just say Edwin's a little nervous, but he's committed now, and the stock has a pattern of retracing in the past, so he holds overnight. He finishes the next day as the price opens lower and moves lower, closes lower than his filled price, so he enters the second day in the black, and the price volatility seems to be settling down a little bit as the price continues to trend lower. Now Edwin didn't indicate that he was using the 20-day moving average, which is on the graph here, but I noticed that just as the price happens to tag that 20-day moving average, Edwin closes the trade on the 28th to protect his profits in the final week. What perfect timing. And the bottom line is he has a nice winning trade. And by the way, Edwin notes that had he just entered one day later, it could have been even better. So, sometimes the Hail Mary pass works either by design or by desperation. Here is the equity curve from his portfolio, and you can see that the flat spots, the hedges, worked pretty well. But you can also see the wild swing the portfolio took from his first day of losses to his ultimate recovery. Not for the faint of heart. And of course, putting all your eggs in one basket is not for the risk averse. So with his approach, Edwin made a total of 13 trades. He put all of his chips into one trade that paid off, but not really a model for managing risk. Our second place winner was from Colorado Springs User Group. Again, didn't use market timing signals. Their strategy was to cherry pick index ETFs, and they're a real-time subscriber. Again, we reached out to the contestant. His name is Jack, and he replied to our request saying, "This is my general approach. I use the primary wave in DW as my starting point for the direction of the market. I'm only trading the leveraged index regular and contra ETFs. I further refine my trades by using VectorVest graphs, which I think are the best graphs out there, to determine entry and exit points. With the graphs, I use support and resistance, moving averages, DPO20, and the stochastics oscillator. I also watch the daily color guard reports to get VectorVest's feel for market direction." So Jack shared some of the clues to his approach, although he didn't want to give away all of his secrets, but you can tell just by his notes that he knows his way around VectorVest. So I'm going to attempt to fill in some of the blanks. As he noted, the contest period opened with the market in downtrend. As he indicated, the bearish DEW and the primary wave signals had him biased to the downside. So as the contest begins, he sees the market follow through to the downside, breaking support. So he opens the first tranche of contra ETFs on the 1st. Notice all of the ETFs are triple leveraged, and notice that we do have a bullish or a regular ETF on gold. I also noticed that SPXU trade was closed the same day intraday, and the balance of the contra ETFs were closed the following day on the 2nd. The JNUG trade was held all the way through the contest period. So we closed the contra ETFs on the 2nd day of trading when their stochastic oscillators are peaking and the buy-sell ratio has fallen to bottoming levels. And so on the 2nd, we reversed the portfolio from bearish to bullish by taking on these bullish ETFs. And again, I notice SPXU now an intraday trade, so I'm not sure if this is some kind of a hedge or just an intraday play, but the rest of our bullish positions then we hold through the 11th. On the 11th, however, we don't flip the portfolio back short, we go to cash. And looking at the market timing graph, we can see perhaps why. Price action coming up off of the low has reached our next level of resistance, long topping tail. We're getting some mixed signals from the market. So Jack goes to cash, and on the following session sees the market open lower and move lower, although it's a narrow ranging day. Well, we can see from the following day's candlestick that move is going to be reversed. But here are the positions we open on the 14th, all triple leveraged bear ETFs, and we quickly reverse on the next day when the market takes that bounce. But notice that on this turn, all of the trades are losers. But at least it was a narrow ranging day and the losses aren't too great. So a nice reminder here that every trade doesn't have to be a winner and we can still be successful in the longer run. So on our bounce day, the market opens higher and has a nice open candlestick. Breaking through that resistance level, it's time to flip the portfolio again back to the bullish side. So we load up the portfolio to the bull side, but as we saw in Edwin's, this is not 10 trades. We put on 5 trades, which we're later going to resize on the 29th. And why would we do such a thing? Well, we're anticipating the Fed announcement scheduled for the next day. So Jack takes some of his gains off the table, reduces his position sizes to limit his exposure to the risk of a surprise. Well, as we know now, the Fed cut rates and the market continued to move higher. Jack will buy back in, but notice the next day, the 31st, the end of the contest, the market pulls back. So the reload of the long position sputters on the pullback on the 31st and are closed. So the core portfolio is back to just token positions to meet the contest rules, and Jack makes one last heroic effort to scalp some wins via an intraday trade and spends about $100 for his efforts. But all in all, a nice and profitable effort. His equity curve, much lower volatility, and a nice steady progression of higher highs in the equity curve as it progresses over time. So to recap, Colorado Springs, 41 total trades over the month-long contest period. Much greater engagement required on this trading system than we saw in our first contestant. Very fun and rewarding when you're executing it well, which of course requires a little bit of knowledge and skill, but he had much steadier gains over time, and the equity curve was much less volatile and had a persistently rising price pattern. Our third place contestant is from our Hershey user group. They used confirmed calls for their timing strategy, and they automated their trading system using some custom searches. Again, we're on an end-of-day basis. Now, I wasn't able to contact the contestant, but they've left their footprints in the sand in their trading details. So using the confirmed call, when they're in a confirmed up call, they're going to buy long from a customized version of raised volume spikers, a canned search within the VectorVest system. I've highlighted in yellow the values and the criteria that have been changed in the search. The first thing they did was they changed the sort to RS divided by actual price, stocks that have strong relative safety scores at a relatively low price. The search looks for stocks whose percentage volume change is greater than 40. Their VST score is greater than a modified 0.9. The addition of RV, RS, and RT is greater than 1.1. RT is greater than a modified 0.8. At the time of the search, the growth rate delta over the past 90 days is greater than a modified 8%. We have minimum price and volumes in our Derby Ready criteria, although we removed the index restrictions. We added that the volume, the shares traded on the day, needed to be greater than the stock's volume, that the stock's price split adjusted equals the current stock's price actual, and that's more of a function of the back testing methodology that is implied here, that if they went back historically, they wouldn't get any benefit from stock splits. And we added a cap on price, that the price had to be less than or equal to $5. So price now between $1 and $5. The search for our confirmed down call situation, we're still going to buy stocks long. And this approach exploits the idea that in a bull market, bear retracements typically are short-lived and get resolved to the higher high. So we're now buying stocks on the dip using a modified version of Explosive EPS Stocks 2 under $10. Again, we have the search criteria as written. I've highlighted the changes. So we're Derby Ready with no contra ETFs. Although we did allow some of the pink sheet exchanges. We're looking for the stock's recommendation to be a buy, average volume over 100,000 shares, an earnings delta over the past 13 weeks greater than 25%. No contra ETFs. Price actual needs to be greater than $1, less than 10. And again, at the time of the search, the stock's price actual equals the stock's price split adjusted, eliminating on the back testing basis any stocks that had gotten the benefit of a split. For the trading rules, we'll now trade our confirmed up call using a 20% trailing stop with a 20% target gain. So it certainly gives our stocks room to breathe with that one-to-one relationship. We're relying on that 60% winning trade percentage we achieved to really deliver the goods. We're going to maintain a 6-position portfolio. We're going to automatically replace closed positions after they hit their stops. When entering the situation, we're going to close any positions that were opened during the prior confirmed down call. We'll invest the average portfolio value, odd lots, and we won't repurchase a stock for 20 days after its sale. We limit the stocks to half of their average volume and the rest of the settings at their defaults. For our bullish approach to the upside on the confirmed down call, we're going to use the VST value as a stop if it falls below 1.12. Again, a 6-position portfolio, automatically replacing. Close any of the stocks from the confirmed up call situation and reload the portfolio with the confirmed down with these new stocks. Average value odd lots as our defaults. We won't repurchase for 9 days on the confirmed downside. And we will enforce sector and industry diversification, allowing only 2 stocks per industry and sector. And again, a 50% limit of average volume. So with these settings entered into the Portfolio Genius, once you activate the Genius, it's really set it and forget it. Portfolio automation kicks in, and there was no work to be done to manage the portfolio. And the result, well, here's the equity curve. Nice, smooth, bottom left to upper right kind of performance, very low volatility, hitting progressively higher highs, and with a whole lot less stress. So the takeaways, 17 total trades, 6 of them were double-digit gainers, set it and forget it automation, and a smooth, persistently rising equity curve. So what a great result. 3 very different approaches to the contest, each finding success. So in conclusion, in the spirit of that competition, congratulations go to our 3 overall winners and to all of our contestants. I trust you found the contest fun and informative. So I invite you to stay tuned for the second part of our presentation, where Jerry D'Ambrosio, the manager of our educational content, will show you a trading technique that you can automate in his presentation titled Trade Like a Pro, coming up next.
Hello everyone, I'm Jerry D'Ambrosio and welcome to this week's special presentation, How to Trade Like the Pros. Here's what we're going to learn tonight. You're going to learn 5 common principles professional traders follow. I'm going to teach you an extremely easy and effective short-term trading strategy, and I emphasize short-term. And then finally, how to quickly and easily identify the best trades. And if you follow the steps we discussed today, you'll know how to identify the correct setup, entry, and exit for each trade. So let's talk first about what makes a pro a pro. What are the qualities that separates these men and women from the average retail investor? And this is all about getting your mind right. This isn't your buy and hold retirement approach. This is for the capital you have set aside to trade a little bit more actively. First, professional traders are realistic. They know that there's no magic pill that they can take that will make them better traders overnight. Success in this industry, in any industry really, comes with time and effort. Just ask anyone who's ever been good at anything. They'll tell you that it took hard work and it didn't happen overnight. Next is that they control their emotions. I know this is easier said than done, but they don't allow losing trades to affect them. Pros don't think of the money first. They focus on doing the right things and making the right trades, and they know if they do that, the money will follow. And one of the reasons they feel this way is because they place trades based on facts and data rather than gut feelings. And we've all been there. We've all placed a trade or two because we just knew it was going to go up, right? We had that feeling. Well, pros don't think that way. They look solely at the information in front of them to make decisions. They're prepared. They know exactly when they're going to get out of a trade, even before getting in. That's because they've examined and tested different techniques to figure out which one is best. And lastly, and most importantly, I think professional traders are disciplined. They stay sharp and focused when things are going well, and they're resilient when they're not going so well. So they have a plan and they stick to it. Well, what happens if you continue to struggle with some of these things? Well, you'll go broke. Now, I don't mean you'll be unemployed, living on the streets, but you won't be playing this game too much longer. Losses will just keep building up, and you'll wind up broke with no more money to invest. If you start doing things the right way, you'll know exactly what you're doing no matter the situation. Just think about the confidence that you'll have. And once you start to develop better habits, you'll start to see more consistent gains. Now, there's a big mistake traders make when first starting to implement short-term trading systems. They follow unproven, complicated strategies. They think that they need to use 5 different technical indicators and 3 different types of moving averages to help identify entries and exits. For some reason, new traders who are just starting out trading this way, they find value in complexity. Well, that ultimately just leads to confusion and, of course, frustration. What I want to show you tonight is what's called the RSI-2 trading system. It was developed by a gentleman by the name of Larry Connors. Larry Connors is an author and trader who has over 30 years in the financial markets industry. This strategy focuses on stocks in long-term uptrends, but are pulling back a little bit and are experiencing short-term corrections. And what I love about this system is that it's so simple. It uses 3 indicators: a 200-day moving average to identify the long-term trend, and a 5-day moving average, and a 2-period RSI, stands for Relative Strength Index, for the short-term trend. Let me show you how this strategy works. Here we're looking at Procter & Gamble, PG, from November of 2018 to current. Procter & Gamble has been a great stock. Overall, price moves from bottom left to upper right, but there have been times where the stock pulls back. It stays above the 200-day moving average, but falls below its 5-day moving average. Long-term uptrend, short-term correction. The added layer to this trading system is Relative Strength Index, RSI. RSI is scaled between 0 and 100, and the industry standard look-back period for RSI is 14 with the extreme lower level at 30 and the extreme upper level at 70. Now, using the industry standard settings, you can see that the RSI fell below 30 only once. Now, I had to go all the way back to June of 2018 because from November of 2018, it didn't fall below 30 at all. Now, that would have been a great buying opportunity, don't get me wrong, but there weren't many. There weren't many opportunities here to buy these dips. What Larry Connors did is he speeds up the indicator and changes the look-back period to 2. And when you do that, you also have to adjust your extreme levels. So along with the price of the stock above the 200-day moving average, but below the 5-day moving average and the 2-period RSI below 10, there's your setup. A setup is when specific conditions are met that tell you to get ready to enter the trade. So again, price above the 200-day moving average, long-term uptrend, but below the 5-day moving average and the 2-period RSI below 10, there's your trade. Let's look at what this trading plan looks like written down. Here are our entry rules. We are going to buy only when the stock is above the 200-day simple moving average and below the 5-day simple moving average with the 2-period RSI below 10. And here's the key. We are entering near the close of the day. When I trade this system, I put a market order in, and I'm entering in right around 3:55 p.m. Eastern Time. Our exit criteria is as follows. We are exiting only when the price goes above the 5-day simple moving average, and we are also exiting near the close of that day. And I'm putting a market order in, and I'm exiting right around 3:55 p.m. Eastern Time. So we enter when price goes below the 5-day moving average. We exit when it goes above. Let's take a look at some examples. Same stock, Procter & Gamble, July 23rd, 2019. Price of the stock is below the 5-day moving average. You can see it closed that day at 113.85. The 2-period RSI dipped below 10, and we saw from the long-term chart that price has been above the 200-day moving average the entire time. Now, when I zoom in here, we lose that 200-day moving average. We can't see it anymore. But we all know that price is above the 200-day moving average, but below the 5-day moving average, and the 2-period RSI is below 10. So we enter the trade. Now, I don't know what the price of the stock was at 3:55 p.m. Eastern Time on July 23rd. So for the purposes here, I'm just going to use the closing price, which was 113.85. So we put a market order in near the close of the session. We're in the trade. When do we exit? Well, we exit 3 days later at roughly $114.73. Why are we exiting? We're exiting because price is about to close above the 5-day moving average. We put a market order in at about 3:55. We're out of the trade, and that's a winning trade. The very next day, we have yet another RSI-2 setup. Now, let me be clear here. I'm not saying that if you would have bought the stock the day before that you're going to buy more on the 24th of July. If, for example, on July 23rd, you didn't buy Procter & Gamble, you didn't have buying power left, or you weren't feeling well, you weren't able to watch the market that day. Well, on the 24th, maybe you had buying power freed up, or you were able to watch the market, and you saw that PG had an RSI-2 setup. Price is still above the 200-day moving average, but below the 5-day moving average, and the 2-period RSI below 10. There's your setup. We buy near the close of that session at 113.15. When do we sell? We sell when it's about to close above the 5-day moving average at $114.73 roughly. So what I'm going to do from here, I'm just going to show you every setup, every RSI-2 setup moving forward. The next setup was on August 5th, 2019. Price of the stock still above the 200-day moving average, but you can see it's pulling back a little bit. It's about to close below the 5-day moving average, and the 2-period RSI is below 10. There's our setup. We buy near the close, again 5 minutes before the close is fine, at 113.08. We sell 2 days later at 115.52 because price is about to close above that 5-day moving average. That's another winning trade. The next RSI 2 setup was on September 10th. Price is still above the 200-day moving average, but as you can see, it's pulling back a little bit. It's about to close below the 5-day moving average, the 2-period RSI below 10. We buy near the close of that session at 119.88. We sell 2 days later at a nice gain, $122.77. Price, we can see, is clearly about to close above that 5-day moving average, so we exit the trade with a market order right around 3:55 p.m. Eastern Time. The next setup was on October 2nd. Price is still above the 200-day moving average, but you can see it's pulling back a little bit. It's about to close below the 5-day, the 2-period RSI below 10. We buy at roughly 121.08. We sell 2 days later at $124. Another nice gain there. Only 2 days. Remember earlier I said this is an extremely effective short-term trading strategy, and I emphasize short-term, and I'm sure you can see that it is very short-term. The average holding period is anywhere between 2 to 5 days. And we're exiting, remember, because price is about to close above the 5-day moving average. So moving from left to right, October 14th, another RSI 2 setup. Why didn't we have an RSI 2 setup the day before? Price is above the 200-day moving average, but about to close below the 5-day moving average. But look at the 2-period RSI, not below 10. All three have to be true in order for us to take this trade. Very, very rules driven. But on October 14th, the rules are met. Price is still above the 200-day moving average, but below the 5-day moving average and the 2-period RSI below 10. We buy at roughly 120.05. And we sell 1, 2, 3, 4, 5 days later at 119.08. As you can see, that's a losing trade. But we're still exiting. Price is about to close above the 5-day moving average. So you might be asking, what about stop losses? What happens if the stock price goes down? When do we exit? You only exit when price closes above the 5-day moving average. Sometimes that may result in a winning trade. Sometimes it may result, as you can see here, for a losing trade. The very next day, though, if you didn't buy it on the 14th of October, you had another opportunity. Again, maybe you didn't have any buying power left, or you just didn't watch the market that day. But we had another setup on October 15th. Price is still above the 200-day moving average, but below the 5-day moving average and the 2-period RSI below 10. We buy at roughly 117.20. Now that resulted in a winning trade because we sold it higher at 119.08. There was another setup. Again, I'm showing you every setup. I'm not cherry picking dates either, by the way. I'm showing you every single RSI 2 setup. Price is still above the 200-day moving average, but below the 5-day moving average and the 2-period RSI below 10. We buy at roughly 116.63. And with this setup, we sell at 119.08 for another winning trade. Now, I went all the way back to November of 2018 for a little bit more extensive research. What I showed you was about 7 setups from July to October. Well, I went all the way back, same stock, Procter & Gamble, from November of 2018 to current. There were a total of 17 RSI 2 setups. There were 16 winning trades, 1 losing trade. That's a 94% winning trade percentage. Now, I know that's just one stock. That's a cherry-picked stock. I obviously wanted to teach you the system, show you a good example. But what I also did was, as of November 4th, I went into the VectorVest program and I looked at the top 5 CI stocks in the database. They were the 5 stocks that you see here. Now, Comfort Index is a VectorVest proprietary indicator that looks at a stock's ability to resist pullbacks. High CI stocks are very resilient. They exhibit tremendous price growth persistence over time. CI is on a 0 to 2 scale. Above 1 is good, below 1 is bad. We are looking at CI ratings for these stocks, the very best in the database, 1.8, sometimes higher. Over the last year, from November 4th of 18 to November 4th of 19, across all 5 stocks there were 68 RSI 2 setups. Not 68 each stock, 68 across all 5 stocks. There were 57 winning trades, only 11 losing trades. That's an 84% winning trade percentage. This is not cherry picking. When you sort and rank a list of stocks by a particular indicator, That's the power of the VectorVest system. When you force rank and bring the best stocks to the top of the list and take the best stocks, that's not cherry picking. That's using the power of rank analysis. Now, I did this presentation back in July of 2019. And from July 8th of 2018 to July 8th of 2019, I looked at the top 5 CI stocks in the S&P 500. They were the 5 stocks that you see here. Again, that was of July 8th of 2019. Across all 5 stocks, there were 88 RSI-2 setups, 63 winning trades, 25 losing trades. That's a 71% winning trade percentage. I also did this same presentation in March of 2019. And the top CI stocks in the S&P 500 were the 5 that you see here. From March 1st of 18 to March 1st of 19, there were 86 RSI-2 setups, 60 winners, 26 losers. That's a 70% winning trade percentage. I wanted to show you the last few results here because every time I test this system, every time I present this system and teach this system, these are the results I'm getting. Quarter in and quarter out, year in and year out, I'm getting fantastic results like this. So let's put this together in terms of performance. What you're looking at here is a trading system that I put together centering around the RSI-2 stock selection system that I just taught you. Now, the difference here, the only difference, is the exit criteria. Those of you may know that right now in VectorVest, we don't have an exit criteria of price closing above the 5-day moving average. Well, I made a slight variation to that and created this trading system, again, centering around the same stock selection system that I just taught you. So price above the 200-day moving average, but below the 5-day moving average with the 2-period RSI below 10. This system bought those stocks on the close of those days. Since February of 2010, this portfolio is up 720% with 203 winners and 11 losers. That's a 95% winning trade percentage over a 10-year period. The VectorVest composite only went up 114%. This is a real money portfolio that we started trading on December 3rd of 2018, following the same system that I just showed you there in that long-term test. I got into a room with Dr. DeLito and Steve Chappell and Ray Clark and showed them those results, and they said, wow, fantastic. Let's put real money to this. So we did on December 3rd of 2018, and that trading system is up almost 31% with 25 winning trades and only 1 losing trade. That's a 96% winning trade percentage. Here's what the market has done over that same time period, December 3rd of 2018 to current. The VVC is only up 6%. So we are tremendously outperforming the market. You may be thinking, this is fantastic. I've never seen a trading system that produces the type of winning percentage that you've just shown me. I love this, but I don't have time to look at graph after graph after graph each day to identify this setup. You're probably wondering, well, if I'm supposed to enter near the close of the day with this system, I would have to spend a lot of time during the day to find a handful of candidates. Well, no. What I'm about to show you eliminates all of that time. Whatever we teach you here at VectorVest, we want you to be able to do it faster, smarter, and better. That's why we put together this 6-week webcast series where we teach you techniques from 3 of the very best professional traders in the industry. You'll learn top trading strategies of the pros and how to quickly and easily identify the best trades. I hope you saw that if you learn to implement strategies like the one I showed you today, you will achieve the success you're looking for. This is Hugh. Hugh is a former graduate of our Trade Like a Pro seminar. He sent me an email. He said, I'm a retired financial services executive, so I had to unlearn what the quote street teaches to start making money. Before taking the Trade Like a Pro course, I found it was difficult to stick with the system since there were so many variables. I never could achieve the short-term trading success I sought. After taking the course, I began to see results right away. I now have a successful approach and I am much more disciplined with my trading. So here's our agenda. This is a 6-module pre-recorded webcast series. In the first module, we get you in the correct mindset for the remainder of the 5 weeks. We talk a little bit more about how the pros think. We talk about risk management, and a very important segment in Module 1 is order entry. Then we get into trading techniques. In Module 2, we talk about bullish and bearish candlestick reversal patterns. They recognize turning points. We teach you the correct indicator to use for each bullish and bearish pattern. And then finally, how to know that you got it right. How do you know that you're in the right trade? Module 3 is called Gaining the Trader's Edge. There are different types of market situations, right? Not all markets are the same. Markets can trend, they can move sideways, they can also hit extreme overbought or oversold levels. We teach you how to recognize those three types of market situations and the appropriate technical analysis indicator to use for each market. Then we get into the pros techniques. Steve Chappell comes in and he's going to teach you a system developed by Linda Ratchke. Steve's going to teach you her system called the Holy Grail. It's for both bullish and bearish markets. I'll talk about two systems, one called the 50-50 strategy, the other called 80 Excellence, and these systems were developed by Charles Schwab. 50-50 strategy is a little bit more of an intermediate term system. You know that the RSI-2, very short term. The Holy Grail, also a little bit more short term as well. But the 50-50 strategy, a little bit more intermediate term. You may hold on to stocks a little bit longer than, say, the Holy Grail. And 80 Excellence is a great strategy to find stocks that are breaking out. And then the highlight of this course is both the RSI-2 trading system and a system that Larry Connors has developed for ETFs only called the RSI-25 strategy. As a bonus, you will receive this trading system. This trading system centering around the RSI-2 technique that I taught you, that's up 720% since February of 2010 with 95% winning trades. You will receive this trading system. Again, the same trading system that from December 3rd of 2018 has 96% winning trades, also up about 30.5%. And you can't forget what the market has done over that same time period. You always want to outperform the market, right? So you might look at 30% and say, that's great, but did the market go up 50%? If that's the case, then I'm not outperforming the market. I can probably do other things. Well, we know that this trading system outperformed the market quite a bit. Most importantly, you get hands-on training by both myself and Steve Chappell. Steve is the Director of Trading Systems Development here at VectorVest, and both Steve and I will be manning the chat room so you can ask us questions throughout the course. Now, this course is valued at $2,995, but register now for the early bird rate, and we'll knock $500 off, and you can register for $24.95. Now, I'm going to throw in another bonus. As an added bonus, we're going to give you 1 year access to our Master the Art of Candlestick Analysis. This is a 6-session pre-recorded webcast series. These are 6 pre-recorded modules, 6 pre-recorded mastery sessions, and also a pre-recorded trading session. Not training, trading. T-R-A-D-I-N-G. We spent a couple of hours wrapping all of the information up. We talk about market analysis, trade setup, trade execution, and then trade management in that trading session. Now, we sell this course for $995 standalone, but we're going to give it to you as part of the Trade Like a Pro workshop. As an added bonus, you'll also get, for the Trade Like a Pro, 6 live mastery support sessions. I talked about how the 6 modules are pre-recorded, but we're going to hold 6 live mastery support sessions. These are designed to help you actually implement the things you learned in the course. We'll take a look at the things you're doing, the questions that you have, and guide you. You will be given a homework assignment after each module, and we'll go over that homework assignment here in the mastery sessions. We will be there to guide you through this entire process. Also, if you currently do not have VectorVest Real-Time, I want to make sure you have access to it during the course. So you will get 60 days access to the VectorVest Real-Time program. Also, by registering, you'll receive 1 extra bonus session after the course officially ends. The bonus session will be a live trading session where we implement what we've learned over the course of the 6 weeks. I'm going to also show you how you can use RoboTrader to manage your trades. I'll be trading with real money, and stepping you through everything from market analysis, trade setup, trade execution, and money management. And this part is huge. Exclusively for workshop attendees, you will receive pre-built searches that make finding your trades a breeze. You are probably thinking, well, great, they teach us these techniques, but how on earth will we find stocks to actually trade? The legwork has been done already. I built these scans to quickly and easily find the best candidates to trade, and the best part about this is they will be automatically inserted into your VectorVest 7 program so you don't have to build them yourselves. Here are the dates. You can go to VectorVest.com/TLP to register. The first pre-recorded module will be released on Wednesday, November 20th, and each subsequent Wednesday following each module will be released. The live mastery sessions will take place on the following days, and these sessions start at 2 p.m. December 24th is Christmas Eve. December 31st is New Year's Eve, so we're not going to hold live mastery sessions on those days. They will be on the 23rd and 30th respectively. And our live trading session will be on January 7th, and that session will start at 8:30 a.m. Eastern Time. That's an hour before the market opens because there's a lot of work that needs to be done before the market opens. So again, folks, go to VectorVest.com/TLP to register. The early bird rate is still available. If you are an elite subscriber, give us a call for special pricing. I hope you enjoyed today's presentation, folks. I really look forward to working with you during our upcoming Trade Like a Pro workshop. Have a great evening, everyone.
Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.